Morning, everybody. We are live on Facebook, LinkedIn, YouTube, X, Instagram. We've got some people who have joined us. Comments are on. Hey, Ashley on Instagram. What else do I need to do? Get my notes out here. How's everybody doing on April 23? We are good to go. Welcome, everybody. April 23, 2025, episode 344. Welcome to Mornings with Scott, the best damn business show for medium and small businesses on the planet. Sound is good on Instagram. Thank you for the check-in. Thank you for the check-in, Ashley. Darren's joined us on YouTube. Looking forward to this, especially thoughts on profit minus regulatory credits. Okay, that wasn't on my agenda today, Darren, but thank you for joining. Let's see what we have to. Oh, maybe you're talking about Tesla. Maybe you're talking about Tesla. That's probably what you're talking about. Where are we? Canadian election. The Canadian election uh, is April 28th, just 5 days away until the Canadian election happens. But the advanced polls started on April 18th and closed April 21. And 7.3 million Canadians have already voted. For context for you American listeners, which is more than half of our audience here on Mornings with Scott. About 17 million Canadians voted in the last election. So 7.3 would be well over 40% of the electoral of the normal votes have already been cast. Over 40%. The election is half over, folks. And what did the Conservative Party of Canada do in response to that? Well, they released their platform the day after the advanced polling was already over. That's what they did, April 22. Remember, advanced polling stopped April 21, and the day after, Pierre Poilievre and the Conservatives released their platform after 40% plus of the country had already voted. What is in the platform? Who cares? It's over already. It's over. This is just the only party that can actually rescue Canada from poverty, from just a declining, horrendous, world-losing per capita GDP, crumbling institutions. The only party that has a platform to try to rescue us from this is incompetent or dishonest. They just show up after the election is basically over with their platform. Unbelievable. The Conservatives don't deserve to win this election, and that's a shame. That's a shame. I teach on my in the business course that you can find the notes to. It'll be in a future module, and it's in some of my past content. The idea of what you should pitch if you're out trying to raise money, just generally trying to sell your business in general, whether for customers, whatever, you should always pitch benevolence. Okay, not competence, not trust, benevolence. Competence is the entry fee, and trust beats benevolence. Trust beats competence, but benevolence beats trust. All right, so therefore you should pitch benevolence. And many companies, many businesses try to pitch their competence. We're offices like this. I can help you find capital. I can help you restructure and manage your cash flow and all that sort of stuff. That is pitching competence. Okay, trust is I've done 25 billion plus of these types of transactions. I've got a bunch of testimonials. There's the trust, but the benevolence is what really people buy. Benevolence is that I understand what you're going through. I empathize. I've seen this before, and I'm going to do whatever I can to help you out of this situation that you're in and help you achieve your goals. Okay, and so you need to pitch benevolence to succeed. Okay, and that's what political parties do. That's what the Liberals have done. That's what the Conservative Party in Canada has done. They pitch benevolence. We need to help with the housing and the younger generation and the poor, and those are getting creamed, this and that. They all pitch benevolence, but that doesn't mean you shouldn't be competent. You can't just not be competent at the same time, a pitch is not, the same as reality. The pitch is what people buy. People buy benevolence, but you have to be competent. That's the entry fee. You have to be trustworthy. You can't be a bunch of liars. That's, I mean, notwithstanding what happens with the Liberal Party. So that's the problem. That's what's going on in Canada. All right, let's move to markets. Anything on Instagram? Nope, I don't have anything there. Stocks are up sharply. Stocks are up sharply this morning as the trade rhetoric is cooling down. The Fed rhetoric is cooling down. Trump says, I want to be nice to China. I don't want to play hardball. Not 145% tariffs and the 4,000 or whatever the hell it is percent tariffs on solar stuff. Don't even think about that. We're not going to play hardball. We're going to sort this all out. And I never wanted to fire Powell. What are you talking about? I didn't type that on Truth Social. The Fed, everything's dying down and the markets have gone for it. It's all up sharply this morning. Stocks are up. The VIX are down. That's the volatility index from Wall Street. Gold is down. The flight to safety is reversing as people are taking their money, going back into stocks a little bit. The US dollar is up. Hang on one second. I need to turn this Bluetooth off here so that the sound is still connected. I hope we're still good on sound. Somebody can let me know if we are. That would be helpful. Bitcoin way back up, a speculative asset, not a flight to safety. Bitcoin, well, we weren't paying attention, up to $94,000 when I looked in the preparation for these notes. Can you believe that? Do you remember when I was buying options log, so speculating that Bitcoin would go up when it was over $100,000, and then it went to $70,000 ish, and that all got wiped out. Well, we're back. We're back to $94,000. Look at this; all can just turn around tomorrow. This is hugely volatile, uncertain times. Let's not be fooled by that. Tesla had their earnings release yesterday, which was horrible. I think at the top line, I didn't write the numbers down, so don't hold me to this, but the top line revenue was down 20% sequential and 13% off the top of my head year over year, and earnings were down 70%. And everybody said, political, it's all political. It's all this people firebombing the cars and the brand is dead and all this sort of stuff. I listened into the earnings call last night and fascinating, absolutely fascinating. I just want to go buy Tesla stock right now. Remember, I do not give you financial advice at that sort of level. I help you with your business. You should listen to me for that. But I'm not, don't go buy securities based on what I'm doing. But I will share with you my thoughts, and you could do with it as you will. I'm not trying to sell you anything. I got to listen to a lot more earnings calls. I used to do that way back when, and I stopped doing it probably just out of laziness or getting busy and other things. But you learn so much. You learn so much, not just about the company, but the world. If you can dial into a webcast and have people ask Elon Musk general questions, that's a pretty cool thing that will teach you a lot. So I set up an alert on my screen this morning to let me know when the calls are in that I'm interested in. So that's going to be a new thing of mine. Well, what did I learn last night on the Tesla earnings call? Musk started off with a speech, notwithstanding reports that I saw this morning that he concluded that's not what happened. He started his speech directly before anybody asked any questions, and they talked about results. Started about Doge and his commitment, and he said, and the spin on this in the financial media is that he's exiting Doge because of the troubles at Tesla. That's not at all what he said. In fact, it was quite the opposite. He said he expects to wrap up his work at Doge in May, and the bulk of the work is already done, the eliminating waste and fraud, and that he will be spending considerably less time on the Doge project because it's basically done. But then he said he will stick around and be involved for the entire rest of the president's term. He's not running away. He's just done the bulk of his work, and he said he needs to stick around at some level so that the waste and fraud doesn't return, is basically what he said. So I thought that was interesting, but people were happy that this part of the intensive work is coming to an end. There's a light at the end of this tunnel, and then he talked about the Tesla earnings and deliveries, which were way down. Of course, it's the deliveries that are down that drives the revenue being declining. That's great English on my part. Way to go, Scott. But the deliveries are down, revenues are down, and therefore earnings are way down, as I said, about 70% sequentially, I believe that it was. And he did acknowledge that the what he calls vandalism, being the keying and the firebombing of Tesla dealerships, has had some impact on Q1 earnings, but he wasn't really concerned of it at all. Concerned about it at all. And in fact, they reminded everybody on the call that they had previously announced, I did not know this, that they were shutting down a bunch of factories in Q1 to rebuild them with a different method, a unique and new method of building cars, and that they would be out of commission for 2 to 3 weeks in Q1 and not able to build or ship during that period from these specific factories, and that they did it all at once around the world. They rebuilt these factories simultaneously, all at the same time. They were quite happy with themselves for having done that. No other company has ever done that, according to them. And so that was always going to impact Q1 earnings. So I thought that was interesting. And of course, as Musk acknowledged on the call, is that Tesla is not immune to global auto trends and that people aren't buying cars. They're just not buying cars right now. That's the cycle we're in automotive. And just look at any luxury vehicle, they are down similar numbers to Tesla. So, yeah, it's flashy and interesting to say the politics is killing the brand and the politics is causing the problem. But I don't know. Well, according to Tesla, it's an issue, but it's not a serious issue as near as they could tell. And then he went on. This is the parts that I love. I'm not really, wasn't interested that much in the Q1 earnings and the decline. I think the politics issue is transitory. Ooh, I hate using that word, but it will pass. But then he goes on, he says, hey, the future of Tesla is large scale autonomous cars. Okay. And vast, that was his word, vast numbers of autonomous humanoid robots. Large scale of autonomous cars and vast number of autonomous human robots, and Tesla is there. They are close on mass production on both fronts. And he says that Tesla, as a result, will be the most valuable company in the world by far. He expects Tesla to be a greater market cap than the next 5 companies combined. Do you believe that? You believe that? I mean, maybe that would be the math if you just say, hey, here's how many robots we could sell. Obviously, they're way ahead on technology. Listen to this, by the way. On the autonomous car front, they are starting right now, like really soon. I didn't catch if that was in a month or 3 months or whatever, but pretty much right away, they are starting this in Austin, Texas with robo taxis. That's good to go. They're launching. And he outlined the plan globally for how to do this. Basically, they're talking to India right now about this. You get one little market, and within a regulatory territory, within a country or within a state, and then once it works somewhere, the mapping is fine tuned. You can just start rolling it out all over the place, and that is starting by the end of this year. By the end of 2025, he says there'll be thousands. That was his word, of Optimus robots working in the Tesla car factories. By the end of this year, thousands of Optimus robots. How's that going to work? How's that going to work for labor in the automotive industry? Interesting stuff. He says in these 2 initiatives, the autonomous auto and autonomous humanoid robots will start being reflected on the bottom line of Tesla by about June 2026. So a year and a couple months away. You're going to start seeing, according to them, the huge impact on the bottom line of Tesla. By 2029, listen to this. By 2029, he expects there will be millions of humanoid robots, autonomous humanoid robots. You've all seen the clips of these things manufactured and sold around the world. By 2029, what's that going to do to everything? It's just mind-boggling. With respect to tariffs and Tesla, he said, I thought this was fascinating, maybe a little in the weeds for everybody else's taste, but it was fascinating that they have been working for several years to localize supply chains. I never really thought of that concept before. I haven't read it in anybody else or heard it from anybody else. At Sinclair Range, in the companies that we've invested in and our portfolio companies, we had like a large part of that plan was to reshore, as we were calling it, manufacturing from that was all offshore decades ago. Well, they're looking at localizing supply chains, which is really makes a lot of sense to me, and said, and secondarily, their BOM, their bill of materials, which is every little piece that you have to buy to assemble a Tesla car, let's say, every little piece is sourced from two different countries. And that's something that they accomplished at great expense and great work over the years as well. And of course, that diversifies the risk. So I thought that was fascinating. And he says, as a result, Tesla is the least impacted of all the car companies. But he did say tariffs are still tough on a company when margins are low, which is what the automotive business is. And so he did acknowledge there's an impact for sure on earnings, but they are the least impacted of all the competitors. And when pressed because of his political influence from the analyst press about what's going to happen with tariffs, he said, "Look, this is the president's decision. I'm an advisor to the president. I've told the president my preference," Musk said, "of lower tariffs and more free trade. There are other advisors that have their own opinions, and he makes his decision. And so I don't even know. We'll just wait and see." Some other tidbits that I thought was shocking. These new factories that they built, I referenced earlier, it's a whole different way to build a car. It's not a new and improved robotic, that assembly line, Ford original sort of concept of the assembly line going through building cars. This is a whole new mechanism. I haven't looked it up. I don't know what it is, but the bottom line is he can spit out a Tesla every 5 seconds. 5 seconds, they can build a car. And currently, the fastest factory in the world is in Shanghai, also owned by Tesla, and they're at 33 seconds. And this new factory is 6 times faster, more or less. And wow, every 5 seconds they can build a new car. He goes on to say, just checking my comments on Instagram here, he goes on to say, I love this quote, that the factory is the product as much as the car. Think about that, you manufacturers out there. The factory is the product as much as the car is the product. I love that concept. And as a parting favorite quote of mine, when they were talking about autonomous robots and autonomous cars and adoption of new technologies, and he said that if you are not, this was the quote that I took down, not traveling in autonomous cars, you'll be like the guy riding a horse using a flip phone. That made me chuckle. All right, let's move on here. Ravina Capital, Ravina Capital newsletter. Ravina Capital is, I think, a competitor to Sinclair Range, more or less, on the investment banking side, selling companies, restructuring, out of Chicago. So you can go look them up on LinkedIn or whatever. I've been on stage with one of their principals there. They seem like good guys. So I'm not protective of the competitive nature of this. I like these guys. And I think I picked this up from a LinkedIn post, but I liked it a lot and they deserve credit. And I'm going to cover this with you. The headline of the post was Tariff Turbulence. What are you doing over the next 90 days? Global trade is changing. Amidst extraordinary levels of uncertainty, we must all rethink how we look at our strategy. 3 observations are top of mind from my recent discussions with global clients. Now, listen to this. This is important, business owners. Traditionally, lenders and investors have prioritized metrics like EBITDA to assess a company's financial health. EBITDA. I know some of you don't follow along on those acronyms. That is your earnings before interest, taxes, depreciation, amortization. And is used in the business world as a proxy for operating cash flow. However, in the face of trade volatility, the lenders I am speaking to are shifting their focus to working capital. Exactly. You need to have a hard view of your cash flow and working capital. It underscores the importance of liquidity and cash flow management in uncertain times. I think that is absolutely true. I think it's very wise in these times of volatility. And if you check out the business course, there's a link in the notes to that, the Pathway to Profit Academy. There is one module. I believe Darren has reviewed it, who's listening here on YouTube. There's a module on working capital and cash flow, and it covers the technicalities of that. You may find it very useful. Ravina Capital goes on to say many organizations we are speaking to have been holding out for potential tariff exemptions or favorable trade negotiations, and that while optimism is valuable, the time for wishful thinking has passed. Waiting is not a strategy. Dead on. Leading in crisis means focusing, getting rid of all the riffraff, the needless expenditures. Focus on what you can do, control what you can control. That's the trick to this. I have another podcast called The Grow that's specifically for the cannabis industry, the business. Hey, Ion, thanks for joining us on YouTube, and good morning to you as well. Another podcast called The Grow, which is specifically for the cannabis industry. You can look that up everywhere that you listen to podcasts. And the idea there is not about the plant, and it's not about regulation. It's about the business side of this. And just like Ravina Capital says, controlling what you can control. The Ravina Capital post goes on to say, amid the uncertainty of the evolving trade war, we are helping clients rethink their business and financial models. That includes new revenue streams, operational efficiencies, alternative financing structures. All of this is critical. I couldn't agree with Ravina Capital more. Look them up, even though they're a competitor to mine. Ravina Capital. Well done to you guys. So, in the last week here, what have you been doing? I've been, for some reason, in shareholders agreements. I've been reviewing shareholders agreements, drafting shareholders agreements, all different agreements for clients, for companies that we have invested in. And it amazes me. It's a reminder to me how still in 2025, so many small businesses just skip this entire issue of shareholder agreements. And it amazes me how much trouble that causes down the road. What is a shareholders agreement? It is a private contract amongst the company itself and the shareholders of that company. And that contract outlines how decisions are made, how disputes are handled, what the corporate governance is, what happens if someone wants to leave. Hey, I don't want to be your partner anymore. Well, it provides a mechanism for that. If you want to sell, if one of the shareholders dies, who the board of directors is going to be, how you get new shareholders if you want to bring in new partners, and a mechanism to provide a price for that. So that's all contained in a shareholders agreement. And if you do not have one, well, things are going to go wrong and things can turn into chaos. So why do you need one? To avoid that chaos when things go wrong. It prevents fights. It prevents lack of clarity. It defines who is in control. We used to still do some venture capital, but used to do a ton of venture capital work in the 90s. And it will always make me chuckle and make me explain to the business owners in the startups or the early stage tech companies, and they say, well, I want to keep control. I want to keep 51%. That is the most important thing to me. I say, you're going to sell 20% of your business or 30% of your business, and you will have no control. And the reason you will have no control is there will be a shareholders agreement where you sign away all the control to the VC. That's what's going to happen. They're going to prioritize over you, and you're not going to have control. And when they want to sell, you're going to sell because it's right there in the shareholders agreement. So that's one thing a shareholder agreement does. And it also, not most importantly, but importantly, locks in exit terms. So if one of the partners wants out, what a shareholders agreement normally says is you just can't sell your shares ever, unless you do it in accordance with this agreement. And then there's first right of refusals. There could be shotguns. There could be drag-alongs, tag-alongs. I'm not going to go through each one of these right now, but that's what is in a shareholders agreement. And if you don't have one, well, you're going to end up in trouble. All right, what else do we have for you today? Have you been following this Sunterra farm story out of Alberta and where else? North Dakota, I think. Sunterra Farms, as the headline says, hog tycoon unravels in cross-border legal battle. So a Canadian Sunterra Farms, Sunterra, a Canadian agricultural heavyweight, now faces accusations of fraud, check kiting, and financial deceptions on a massive scale. Someone once told me that check kiting is a derogatory term. I won't say to whom on this channel live, but I'm not buying that. And so don't send me notes. I'm just reading the story. I'm not the one that came up with that. It's in the actual legal documents, check kiting. Sunterra Farms and its U.S. affiliates are at the center of the high stakes financial scandal. The company is accused, check this out, of an elaborate check kiting operation, allegedly moving nearly $5 billion, $5 billion through intercompany accounts to fabricate cash flow. How does this work? Okay, let's say you've got an Alberta company. Let's say you have I think they're North Dakota. Oh, South Dakota. You got a South Dakota company, and so there's a cross border, and so you send, say, $1 million, you write a check, literally a manual check, and you send it, or you do a transfer, a wire transfer. But if you do a wire transfer from Alberta to South Dakota, that transfer is going to clear in about a day. But if you write a check, you deposit that in South Dakota, and it shows up in your account. You got the money for $1 million, but it doesn't leave the Canadian bank account for like a week, 10 days, maybe longer, just because of the inefficiency of the banking system. And so for that week to 10 days, you got, $1 million in each account. You turned 1 million into 2 million in that hypothetical example. And that is the allegation here. That's the allegation here. And if you do that, all of a sudden you have inflated balances on both sides. You could be on side with credit facilities. You can collect more interest from the financial institutions. And so all sorts of things are alleged here. $5 billion worth of this. The lawsuit was filed by Compeer, Compeer Financial, US-based lender, agricultural lender, who claims that the Sunterra inflated balances to secure credit and game the interest system, as I just said. You always see this in troubled company work. When I go into troubled situations, very often you see two things you want to look out for right away. Check kiting, for sure. And also checks in the drawer. What does that mean? So people are like, oh, here's my bank balance. It's got $1 million. And here's my accounts payable. See how I've paid everybody and I'm current. But the reason is because they wrote checks to the suppliers and then they put the checks in the VP finance controller or president's drawer, desk drawer, never mailed them out, never mailed them out. And so from accounting system, it looks like it was paid because you made the checks and those are entered into the accounting system, but they're never cashed. So the cash is still there as well. Those are two things you want to check for when you go into troubled companies, and you see that often. The U.S. judge appointed a receiver tasked with overseeing 110,000 pigs. Oh my goodness, across 54 barns in South Dakota. The court cited financial misconduct, but also a grave concern for animal welfare. Obviously, I can't even imagine being the receiver over an operation with live animals of that size. Some of you are receivers. I know that. You should let me know in the comments how you think. Maybe it's no big deal, but to me, that would be very nerve-wracking. It's not just about preserving assets, said the judge. It's also about preventing operational collapse on a massive, massive hog farms. Also, they reported missing financial data and alleged that Sunterra tampered with or deleted records. That's what is going to get them at the end of the day. The cover-up is always greater than the crime. Remember, our theme for 2025 is defense wins championships. Dot your I's, cross your T's, keep all your records, be up to date. That's what is going to go down here. The judge cited lack of cooperation, quote unquote, inconsistent books, and vanishing data, pointing to a cover up. Sunterra denies the wrongdoing and, in fact, countersued the lender, Compeer, alleging breach of contract, said they acted in bad faith because they knew of the scheme of the check kiting and signed off on it in the past, and maybe they even encouraged it. Do you believe that? I'm having a hard time believing that they allege that the support was literally caused by the withdrawal of support. I don't, you see that all the time. I have one of those situations right now that in the future we'll be talking about on this show for sure. But I don't know if that makes sense in this case. They also filed in Canada. Harrison Partners is the proposal trustee. Where are we on time? I think we've hit the 30-minute mark exactly. I'm off to Calgary. I'll be up in that area probably the rest of the week, maybe Edmonton on Friday, but I will try to get a Friday show out for you as we were trying to do Monday, Wednesday, Fridays. I hope you guys had a great long weekend last weekend. And let's get on with it. Any comments I need to adjust before I go? Not there, not on Instagram. We are good. Thanks, everybody. Talk to you Friday.